What's up everyone, it's County with MoneyVest. So in today's video, we are going to be talking about Palo Alto Network and cybersecurity stocks in general because they're all selling off pre-market. They're down anywhere between 6 to as much as 22% because Palo Alto Network reported their earnings earlier and they cut their guidance for the entire billings and for the revenue for fiscal year 2024, which obviously did affect the likes of Zscaler, CrowdStrike, Fortinet, CIBR, which is a cybersecurity ETF. So in this video, I'm going to break down their valuations, what it's going to look like pre-market, the median and the average price to earnings, price to sales, and price to free cash flow valuation metrics, and also talk a little bit about the earnings itself and why I do believe that this is a bit of an overreaction, but at the same time, the valuations were already a little bit more expensive, so it's quite reasonable that they're coming down pre-market as they are selling off, but it's only good news for us long-term investors that are looking to add more exposure to cybersecurity. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us and of course getting access to all the members only private videos. You will be able to access the early beta launch in March for our moneyvest.com platform, as well as get all the trade alerts, options alerts, and trade ideas with a link down below. There's a few more spots left and a 16% annual discount that's available for another few weeks here. So going over to the actual numbers, Palo Alto Networks shares plunge after company cuts the full year billings. Now, one of the greatest achievements for most of these cybersecurity companies that's happened over the last year is profitability. Profit, profit, profit. I cannot emphasize enough how important and valuable profitability and actual bottom line earnings are. It is one of the most important things for sustainability long term for any business, for any company. And Palo Alto Networks, CrowdStrike, and even Zscaler, they've all done an incredible job kind of turning the corner towards profitability. Fortinet was already profitable. It was one of my top picks for cybersecurity, but earnings per share here are coming in at $1.46, strong beat versus the consensus expectations $1.30, and revenue came in at just shy of $2 billion, still better than the expectations of $1.97 billion. Net income was $1.7 billion for the quarter, or $4.89 per share, compared to $84 million or 25 cents in the fiscal second quarter 2023. So it's a huge jump for the company on a year-over-year basis, and now they're guiding for the full year total billings between $10.1 and $10.2 billion compared to its previous guidance of $10.7 and $10.8 billion as well. Now, Palo Alto Network expects full year revenue to be in the range of $7.95 to $8 billion compared to the prior guidance of $8.15 and $8.2 billion as well. So it's basically a $2.2 billion, so $200 million hit on the actual guidance that's been cut. So I do believe that that is really not that materialistic when it comes to the bottom line earnings. Yes, there's going to be a little bit of a strategy shift. Yes, there's going to be some cyclicality, and they are also doing that because they are wanting to accelerate growth in our platform migration and consolidation and activating AI leadership as well. So adding to that, companies expected a difficult customer as the company shifted the stance as well. So this cut in guidance of $200 million is coming on the back of a little bit of a shift in strategy and focusing on accelerating their AI leadership, which again, long-term is going to be beneficial for the company, for its shareholders, for the customers, and for cybersecurity in general. Now, this is the 8th consecutive quarter of operating margin expansion, so focused execution against top-line targets. So revenue of just under $2 billion with RPOs of sitting at $10.8 billion, up 22%. And they're looking at total billings up 16% year over year at $2.35 billion. And this right here is AI, artificial intelligence, most significant inflection point in cybersecurity, the next new TAM, an impact of AI on cybersecurity. So phishing emails have been increased tenfold in 12 months driven by AI. So that's so much potential that has given hackers to actually start using AI to start sending out phishing emails, and have also increased the number of attacks where the cybersecurity demand and need is only growing, and it's only gotten more prominent as with the rise of AI. So not only is AI increasing the total addressable market, but AI is also going to help improve the technology for cybersecurity for the likes of Zscaler, Fortinet, CrowdStrike, and of course Palo Alto. AI-driven malware created in a fraction of time as humans, deployment of dozens of enterprise co-pilots to our customers and employees as well. $300 billion will be spent on AI software by 2027 is what they're also expecting, and this is the entire guidance. For EPS non-GAAP, they're looking at $5.45 to $5.55 per share, and that's going to be a 23 to 25% year-on-year growth for the company with adjusted free cash flow margin of 38 to 39% for the business as well. So if you come over to the valuation right now as it stands, what you'll notice is that the price pre-market trading at $284 for Palo Alto, market cap of just sub $90 billion as of this pre-market open, and price of sales we're looking at 11, price to earnings of 51.5. This is after accounting for 555 price or earnings, so 545 to 555, so I'm accounting for 551. That's kind of like in the middle of that range, and we're looking at a forward price earnings multiple of 551 and a price to free cash flow of 28, which actually is not that bad. However, if you take a look at the PEG ratio, which is simply taking into account the price to earnings divided by the growth rate, which is going to be around 23-24%, which is what they have guided for. So let's just assume 24%. We're looking at a PEG ratio of 2.14. So this is up to you to decide whether this 2.14, 2.15 PEG ratio is reasonable for you or is it too expensive. Ideally, I want this to be closer to 1 or closer to 1.5 would be a lot better. So let's say that Palo Alto, for example, trades down to 250 and now we're looking at a PEG ratio of about 1.89. If it trades down to, let's say, 240, we're looking at 1.81. If it trades down to 225, we're looking at closer to 1.7, which I think would be a lot more reasonable for me, considering that the P multiple would come down to 40 and the earnings growth is expected at 25%. So that would be a level. Palo Alto Network, a lot of these companies, balance sheet wise, are phenomenal because they've got a lot more cash versus the debt that's on the balance sheet. So if you come take a look at the balance sheet here, you'll notice that the companies are flooded with cash with little to no debt. So they've got negative net debt, negative $1.1 billion. That's incredibly good. That's exactly what we want to see. Fortinet is the same way. I believe CrowdStrike and Zscaler are also the same way. And we've got, again, the valuations a little bit more on the higher side, 57, 58 times. Earnings 17 times sales, which is obviously a lot lower now considering the expected sales and the price, which is down 22% pre-market. And efficiency and valuation wise, again, like I said, it's actually quite reasonable. Still needs a little bit more room to the downside for me to be more interested in the stock. But at 284, this right here is going to the valuation. Now, other stocks are also dropping. Fortinet's down 6%, CrowdStrike and Zscaler are down 9% each. Valuation for most of them are kind of similar, especially when you look at CrowdStrike and Zscaler, 90, 91 times earnings here, 60, 61 times free cash flow, and 15 or 23 times sales. So they are somewhat similar in terms of where they trade in terms of valuation. Fortinet is the only stock that I would argue is trading at a much better value for money. But even Fortinet at closer to $40 would be ideal. That's exactly where it was trading down to. So if you come back over to Fortinet, you'll notice that we were trading down to $40 right after the earnings were reported, and then it got bounced right back up. And such a massive rally from mid-40s, valued over 61, 62%. So for me, Fortinet at low 40s is an ideal price point to be dollar cost averaging into and being a little bit more aggressive. For Palo Alto Networks, in the low 200s is what I would be watching. So if you come back over here, you'll notice that PANW selling off pretty aggressively pre-market and a very strong support at that 200 simple moving average. That's going to be aligned at 260s, 259, 260, and a much better, much stronger support at the 300 SMA at 230 for Palo Alto. And Fortinet, as you already know, low 40s is going to be the level to keep in mind as a potential buying opportunity here. That's going to be the massive support for Fortinet over here. And then when it comes to CrowdStrike and Zscaler, I mean, a lot of these companies have just ripped higher and higher new all-time highs. I mean, from lows of about $92, the stock is up 260% since the beginning of last year. So absolutely massive, massive rally. And right now we're coming down to that support. Again, previous resistance potentially acting as a new support at 289, 290. But I would be a lot more interested, of course, in the low 200s. Preferably down even lower, down in the 200, 300 SMA range. And there is a massive amount of negative divergence that's also playing a big role for cybersecurity stocks. Zscaler is kind of like the same way. There is a negative divergence playing along because, as you'll notice, we've got the price action pushing higher and higher and the RSI itself trading lower and lower. So that right there is a negative divergence. And I would be a lot more interested, I would say, for Zscaler, closer to 160s, 150s for this company. So again, we want to look for good deals. We want to look for better deals, better prices, discounted prices. and that's exactly what we want. And last but not least, I want to go over the median and the averages. So on a median basis, the price to sales for cybersecurity stocks for these top 4 trading at 13 to 14. Price to earnings is 69 to 71, and price to free cash flow 43 to 44 is where we're at for these valuations. But I'm still going to be more interested in picking up more CIBR, that's your cybersecurity ETF, which is down almost 4%. So this could be a good opportunity for me to pick up more shares for this stock moving forward, for this ETF to dollar cost average into. So hope you all enjoyed this video. Let me know your thoughts down in the comment section below. These are, again, fantastic companies. A little bit of an overreaction, in my opinion, for Palo Alto Network. So I wouldn't be surprised if it does end up actually getting bought up here intraday. But lower the better from a dollar cost averaging standpoint. From a long-term standpoint, I would be waiting for better prices for these companies here. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And as always, happy investing. I'll see you all in the next video.